Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic, fired up. It's been about 2 weeks. I'll tell you what, I've had quite a few things happening in my life, but we're back behind the mic. We're going to talk about how I'm trading a $225,000 selling premium portfolio, but we're going to talk about relevant things like what happened yesterday. You know, the Fed came out and said they're going to continue being aggressive, moving interest rates higher, and I'll tell you what, that's the right thing to do. Well, Wall Street thought or got duped that the Fed would not raise rates, and of course they sold the market off some 1,000 points on the Dow. Now, that gives us a great opportunity for some great cash secure put trades. Did I do that yesterday? Actually, I did not. I was kind of caught off guard, just like most people. But with that said, moving forward, let's just talk about how we trade this market. I'm going to show you how I trade this market, okay? So we have a lot to talk about, so go get your cup of coffee, sit back, and if I'm too much for you, hit pause, take a break, come back. I'm going to show you a trade. I want to show you how I'm using the indexes to generate income. Now, this is going to be a great opportunity for anyone that would love to use the indexes to generate cash flow on a monthly basis. Now, I have two ideas, two trades that I do. Hopefully, I can show you those trades here at the end, so stick around. But let's go ahead and get to this. If you've never been to my channel and you like generating cash flow in retirement so you can live the good life, right? While everybody else is worried about inflation and all the things that hit our bottom line, we, selling premium traders, are generating cash flow and we're able to live the good life. So if you like what you're hearing today, I want you to subscribe to my channel. It's right there and it's free. I try to come back every single week, but sometimes even I have to take a break. Now, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. I'm going to share with you an email I sent to the members. I like doing this. Haven't done this in a while, but we're going to do this more continuously over at the membership. I love to do stock showdowns. I always think in my head, you know, I have a favorite stock, and I love to then compare and contrast it with a similar stock in the same sector. In this stock showdown, I showed the members Bristol-Myers versus Gilead. Now, this is not a buy and hold stock showdown. And who has the better business, who has the mature business, and quite frankly, whose stock will continue to go higher. This is for 30 days because that's what we do here. We talk about the next 30 days so we can generate cash on the table. So I love to use the stock showdown to see the numbers. And when I break it down, I absolutely love just looking at everything about these two companies. It actually is refreshing. It gets me back to where I can research stocks. Now, this is very simple research, but it allows me to get out there and look at stocks that I otherwise would not use. Now, I do have Bristol and I do have Gilead, so this is an easy one for me. When I run through the numbers and we really look at where these stocks are right now, one thing I want you to see here with Bristol-Myers that I absolutely love. Now, minus yesterday's tremendous sell-off, can you see where Bristol-Myers has this nice support line? You know, this nice support line right here is something that we selling premium traders can bank on. Big Wall Street loves big S&P type companies that pay nice dividends. Well, Bristol and Merck and Gilead are those companies. Now, Gilead has had a choppy trading session, and you could see absolutely rocketed higher with earnings, and I think they're looking to buy a company. But Wall Street really started buying, and I make note of that here. It's very important that we look for those beautiful trading ranges and not try to trade these spikes right here. That's the key. That nice support line gives us the ability to place trades and feel comfortable with them. Now, what I love to do, I love to talk about the 30-day trade. And as you can see, Bristol-Myers, if we look at 3 strikes out of the money, pays a rather decent 3.22% for a huge stock, non-volatile stock. 3.22% on cash invested, that's what we're looking to make. That is the wheelhouse trade. If we can make the 2.5 to 3.5% per 30 days, you are absolutely killing the stock market. I mean, Bernie Madoff went to jail because he lied that he was making a mere 1% every single month. Now, looking at Bristol Myers and Gilead, you can see Gilead too has some nice premiums. Again, it's in that wheelhouse, 2.5%, 3.5%. It's not too crazy where you're getting 5 and 6%, which tells you, yeah, you're dealing with some volatile stocks. So I like Bristol here. And in fact, I tell the members, look, they absolutely have that support line that I like. The crazy trading that was happening with Gilead, I felt like it was going to pull back. I don't think Gilead's ready to get into the 70s yet, and sure enough, it pulled back, and I think it's now trading at 62. Bristol, being very stable, did not sell off that much, still is in the range, and still is using that support line I talked about up here. And I'll tell you what, that absolutely is beautiful. That's what I want you folks to do. I want you to find those support lines, and if you're going to write a cash secure put, right? You want to post up the money to buy somebody's shares. You give them 30 days and you select the price that you're going to buy their shares. You'll get paid a decent premium when the markets are falling. But more importantly, you have that downside protection and you don't own the shares. So you're a little more flexible, both in mindset and in function, where you could actually roll out and down, maybe not make as much, but you're not stuck holding the shares. And then when the stock falls, you have that mental mind block that now you're in a stock, it's fallen tremendously, and your next covered call right is not above your stock purchase price. That's the mental block that everybody has. And eventually you'll get to where you don't worry about that and you write covered calls, even though the strike price is below your stock purchase price. That just comes with experience. Now, if you liked any of that and what you're about to hear and what you're about to see, because I show the members every single trade I do, I have a membership. If you go to cptdashboard.com, click Upgraded Dashboard, you will see that I give you 1 free month. Hey, look, this market has opportunities all over the place, and I try to take advantage of them. You see exactly how I trade the stock market if you join me at the membership. Would love to welcome you aboard. All right, so how do I trade a $225,000 portfolio? Well, with that much cash, I'm able to diversify. And to be honest with you, I will trade above the 225 and I will trade below my 225. In fact, last month when I did the monthly recap for July for the members, I only used about $169,000 to generate the income I did. Now, other months, I'll find myself getting a little loose, and I find myself using a little bit more. But for the most part, over the past 5 and 6 years, I've shown you that I use about $225,000. Now, right now, what you see here are all the trades that are on. They are live, okay? So as you can see, I have many trades that are going to expire in September. We talked about this. We are contractors for cash flow, okay? What we do is this. We buy a stock, place the trade, we collect the cash flow, and then as that trade develops, maybe we buy the option back because the stock has fallen. Maybe the option expires worthless. We're able to roll it forward for a credit. We continue to do this every month. See, that's the mindset. We are contractors. And I think I gave this example last time where you'll see a contractor come to your house, they're doing some work, and then they pick up the phone and they're looking for their next job. Right? They have to keep the jobs coming in to have the forward cash flow. Well, that's how we do this with selling premium. It's not a one-off deal. So all of these trades you could see are booked for September. Now, I do have an October trade with Morgan Stanley. And of course, that cash secure put I did when the markets initially fell. Boy, I'll tell you what, look at that TQs. It's at the bottom there. 52.50 is the strike. I was paid $16. And I remember back when I placed that trade, I talked about the markets would have to absolutely get crushed to be assigned the shares of 52.50 and my $16 not cover the downside. Well, guess what? That $16 will be used to cover the downside. Now, that's a January 2023 expire, so we'll worry about that then. But I'll tell you what, that trade there is something that I want you to consider. Using a long-dated cash secure put to generate cash flow up front. I did the math on TQs, where if I did a cash secure put at the money, with the markets being at the lower end of their trading range, for 8 months, I could actually generate the income of about $1,000 a month on $40,000 invested. Now, that number blows my mind because remember, I'm in retirement and I need to generate all this cash flow right here. See all this green cash flow that I need to generate? That is going to pay my bills. So look at the long dated leap on your favorite company, maybe an index, and look to sell a long dated cash secure put. If you understand the strategy, right? If you understand you're parking the money literally for 8 months to a year, do the cash on cash percentage gain to give you a feel. That trade right there that you see at the bottom, when I placed that trade, that was a 30% cash on cash trade. I put the money to the side, they paid me the $16, and guess what? That's 30% cash on my money. Where are you making 30% in this market? Many people will say, hey, you're going to get stuck with shares considerably lower. And you're exactly right if that's the case, but we don't know. But if we are, what are we going to do? We're assigned the shares and we're going to write near-term covered calls. And hey, even if the strike prices are considerably out, using a 30 delta or a 20 delta, we're gonna pick up crumbs as the overall market moves higher. Look, over the past month, you have seen the stock market have optimism, saw that the Fed was doing what they had to do, and they were moving it higher. What happened yesterday? The Fed shocked everybody, saying they're gonna continue to raise rates. But look, in the short term, that's bad for the stock market. But for the long term, it's shoring up all the holes in this financially engineered deal that they have done since 2007. Okay, so have a half cup full mentality, trade it with a half cup full trading gain. Now here's August. You can see the big fat number right there of $400. Now, look, in this game, we make money, we lose money, right? That's just the way it rolls. Well, what happened this month? I had 2 major hits on Morgan Stanley. I'll tell you what, I did not think Morgan Stanley was going to jump off the chart, and that's exactly what it did. And I'll tell you what, I lost $800 on a poor man's covered call trade. Now, if you know the poor man's covered call, you know that hurts. That absolutely hurts because that's a premium only trade. I am literally just trading that for the premium. And to have my shares taken away when it's trading much lower, well, I was going to take a hell of a hit. I decided I'm going to absorb that hit, lose the $800. We're going to look to roll it, and I'm going to use the next couple months to work on this trade. Now, it sucks, and I've let a poor man's covered call trade on another stock go for this exact reason. When we're deep out of the money, we're looking to write little covered calls that bring crumbs in the pocket while everything recovers. It's just the mindset you have to have. You can't sit there and say, okay, I'm going to wait for it to come back, then I'll write a covered call. You have a time. You have a clock ticking because the poor man's covered call is a leaps call option that expires. So every day that it's sitting on the sideline, you don't have a trade happening, time is ticking. Okay, time is ticking. So I have to generate income with that leaps. So that is a major hit to August's numbers. Now, I've been able to battle back. This is the amazing thing, and this is what I want you to take away from today's video. I was down, literally kicked in the nads, and I didn't lose my focus. I didn't stop trading. We do what we do. I call it my grind. I have to grind. If you're not grinding out there, okay, you're going to fall behind. So what I want you to do is take away from my August numbers one simple thing. We start out the month literally in the hole, but we keep grinding, and look where I'm at now. I'm going to end the month probably around $400. Now you're sitting there saying, look, man, how are you paying the bills? Well, I'll show you how I'm paying the bills. When you grind all year long, right, you're going to have ups and you're going to have downs. And if you're doing it right, if you're staying the course, you could have a bad month. Hell, you could have a couple bad months. But look, at the end of the day, your overall selling premium cash flow hopefully is going to continue to produce the kind of cash flow you need to still live the good life. Now, right now, I'm sitting at $47,700 for the year. That's 8 months in. And I've been averaging about $3,000, maybe $4,000 on the high side per month. So do the math. I'm not going to get to my $100,000 goal. Well, in this market, I'll take that number all day long. What I have to do is adjust my trading But most important, I'm telling you, stay in the game. Get the mindset that yes, you have to bite the pill. The absolute market is getting tanked. You now have to continue to fight the good fight. Okay, so I'm going to show you the trade, and I think you're going to like it. It's a poor man's covered call trade on Dutch Bros. Now, I actually have 200 shares of Dutch Bros that I acquired through a cash secure put. You can see it right there. In the green, I own the shares. That's a covered call on my shares. The purple is the poor man's covered call where I bought a leaps option. I'm going to show you exactly why I did this and why I believe this is a great monthly cash flow trade for me. Okay, so the most important thing when it comes to a poor man's covered call is the time value cost. We've talked about that many times. If you're going to enter a poor man's covered call trade where you buy the leaps call option and then you sell near-term covered calls for cash flow as if you own the shares, I'll tell you what, you have to make sure the time value is as minimal as possible because that's what you're paying off and you're hoping you could do this maybe 1 or 2 trades and then you let it go. If you are stuck with the leaps, well then it becomes a different mindset and we're truly looking to generate cash flow every single month while we own that leaps. And to be honest with you, that might be for the entire year. Well, here's how Bros set up for me. When I did the math, I looked at the October 2023 leaps. We're getting to the point where we're not even looking at January leaps anymore. We're now looking at mid-year leaps. They have an October 2023. Notice what I did here. Bros trading for $38.98. The 1750 strike is trading for $21.70. I'm going to pay $21.70 for the right to take somebody's shares at $17.50. Okay? When you look at the time value portion of that, you have a time value cost of only 22 cents. That's less than 1%. So that hits my wheelhouse. Now, in this case, look at what we're doing here. This is the important thing to look at. If I were to buy 100 shares right now, it would cost me $38.98. By taking control of 200 shares with this leaps call option, I only pay $4,300. That's a little bit more, but for $4,300, I'm able to have control of 200 shares. And that's the important thing here. And the cost to have the ability to sell premium on 200 shares when I could not do that with just 100 shares is 22 cents per share. We can make that back. And as you could see, when it was trading at $38.98, I could sell the 41 strike and pick up $2.35. That was a 38-day trade, but look at that cost on cost percentage gain. 19% if everything goes perfect. And if my shares are not taken away, meaning it does not finish at the strike price of 41, I pocket $470. And that's 10.8% cash on cash. Let's go to the chart now and I'll show you why I think this Dutch Brothers trade was good for me. Now, I don't know if Dutch Brothers is good for you. I'm just showing you my trade. So you have to do your due diligence. Do not go out and buy Dutch Bros because of this video. Make sure you do your due diligence. Now, looking at Dutch Bros, check this out. I absolutely believe in that support line right there. Look, Dutch Bros is expanding and growing, and it seems like management knows how to do this without overspending. And I'll tell you what, if you think about their business model, they don't have the huge overhead like a Starbucks does. So I absolutely love Dutch Bros, and I'm going to keep those 200 shares, and I'm going to keep the leaps call option that I purchased, unless Dutch Bros finishes above that strike. Now, with the market sell-off, you could see it didn't get hit too badly. We're going to go ahead and trade this, but notice that support line. You know, earlier in the video, I talked about Bristol Myers support line. Look at Dutch Bros. You know, Dutch Bros is a new company for the most part. Been on the stock market now for maybe 2 years, but I think they have displayed, management has displayed enough confidence that Wall Street keeps coming back to them. We're not getting these violent trades in a SPAC trade, and that's what they were. Look at that steady chart that we can absolutely bank on. So you can see, at least in the short term, if Wall Street is going to move sideways to higher, they move Dutch Bros with it. And that's why I stuck with my 200 shares of Dutch Bros, and I went ahead and did the poor man's covered call trade. So what I want you to do is this. I want you to look at 2 things when you're looking to place trades. I need you to look at the support lines and the resistance lines. It's very important to understand the resistance as well, because as you could see, these resistance lines can potentially become new support lines. And you have to know that, because if the stock is down here and you write the covered call down here and it breaks out, you're in trouble, right? Because if your stock purchase price is here, then you just find yourself adding to the cost of the trade. You're going to have to buy it back. You're going to have to pay more than you were paid. And of course, you hate that because the cash flow you put on the table for that month is gone. But with that said, if the markets are trading sideways to higher, we can find these bankable trades. And for me, I think Dutch Bros could be one of those trades. I have no problems using Dutch Bros to generate monthly cash flow. Now, I can go on and on about how I trade my $225,000 selling premium portfolio, but you know what? I think that's the core right there. If you're out there, you're looking to generate cash flow, I'm telling you, think about the selling premium trading strategy. You're able to generate cash flow, and it's paid up front. And that's the beautiful thing, because you can place a long-dated put, like I talked about, and get paid up front instead of waiting for the back-end payment. That's what I love about this. And of course, writing covered calls, I'm able to generate that near-term cash flow. It's all about generating cash flow in retirement. It's a mindset. We're using the stock market to do it. It's no different than you saying, honey, I need to put cash flow on the table. I'm going to go work a 9 to 5. I'm going to go work a 9 to 5 so I can put money on the table. That's how I see the stock market. My portfolio is that job, right? I do not say I'm going to go work a 9 to 5. What I'm going to do is get in front of my portfolio, and we're going to do trades like this that puts the money on the table. Hey, that might become a drinking game. Every time John says putting money on the table, someone is getting drunk. Hey, look, I'm going to leave it right there. Absolutely want to encourage you to join the membership, because right now is the time to get your 1 free month. And look, as I move into retirement, which is happening December 13th, the membership's going to take on a completely different look next year. So I think you want to stay tuned, because we're going to include many different things we're not doing now. Got a lot of spinning plates in my life, but come next year, we're going to incorporate seminars and some mentoring. So hey, this would be a great time for you to bang that like button if you like what you heard today. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.